Hello, welcome to Strictly Money at the News Farm, where all voices matter. I'm Saijal Patel. The World Wide Web has certainly evolved from the days businesses would post pages for us to read. And now Web3, the next iteration of the internet, has a lot of people buzzing with excitement. But it's early days, and there is still a lot of debate as to how it evolves, how it should evolve, and who will be the winners and losers in this space. Joining me now to discuss all things Web3 is Bobby Del Rio. He works on Web3 investment teams around the world as an advisor, a consultant, and a brand ambassador. Bobby, great to have you on.
Hey.
So Bobby, walk us through Web3. I mean, we had Web 1. I still remember the days of Web 1. I'm aging myself. We're in Web 2, and then we're going into Web 3. How is Web 3 different?
Okay, so Web 1 is really like the first part of the internet where everybody was going on the little websites, and there'd just be like a graphic, and you just like type, and you're like, wow, like I'm typing on the computer, I'm so impressed, right? And then Web 2 is really like the social media sort of ecosystem. It's more interactive, more e-commerce. So Web 3 is more like blockchain, okay? So that's Metaverse, it's DAOs, it's DeFi, it's NFTs, it's this, it's sort of like a decentralized ethos. So imagine internet without intermediaries, right? So it's envisioned as a sort of internet without governing bodies, which sort of may or may not come to pass.
Yeah.
But that's the idea.
Yeah, so my understanding, and I know a lot of people are talking about it because they're saying, look, this is going to be transformational because, as you said, there's a lot of content out there. It's user generated, right? But yet it's the Googles and the Facebook, now known as Meta, that owns it and actually monetize it. So am I correct? The idea is that it decentralizes this and it democratizes this.
Yeah, I mean, I think the idea is that, people are sort of tired of big companies that kind of like control your data and sort of dictate the pace of everything. And again, this is somewhat of a debate, but I think the promise of Web3, the promise of the blockchain, the promise of decentralization is that everything is peer-to-peer, right? So it's almost like that Bitcoin white paper, that 9-page document that, surprisingly takes a long time to read, is really the foundation of this sort of like new envisioning of the world, where you can sort of like conduct business all around the world with different people at lightning speed without any intermediaries whatsoever.
So walk me through maybe an example. So say
Sure.
I create a blog in Web3. How would that work for me?
Right. So it's probably more helpful to think of the foundation of what a blockchain is, right? So a blockchain is essentially a ledger. So essentially you would copy data onto one block, right? And then there'll be a series of blocks all around the world on different computers where that data is essentially replicated, and it's immutable, so you cannot change it. So essentially you have multiple versions of that data all around the world, and they cannot be changed. So it really just reconceives the way that you view information and how information is processed around the world.
Okay. Then what are the limitations of Web3? And one of the things that I thought about is, you got your Googles and your Facebook that control Web 2, and part of the reason is we want to move away from that. But what's to stop them from integrating Web 3 and continuing to control?
Well, I mean, so their goal is to control Web3.
Yeah.
I mean, Mark Zuckerberg's gone on record as being like he wants Web 2 to be the portal to Web 3.
Okay.
Which is interesting and could materialize, but also upsets a lot of people. So look, the challenge is that a world without intermediaries sounds great, but probably isn't possible. And in fact, there's a debate that some of the larger Web3 blockchain organizations are the intermediaries. So I don't know, do you think that a world without Facebook is better if you actually have a Coinbase instead, which is one of the biggest exchanges in the world? So for me, I'm maybe somewhat bold in what I think, but I just believe that decentralization and immutability is somewhat of a myth. And I think the future is going to be a compromise between Web 2 and Web 3.
Okay, we have about 20 seconds to the break.
Yeah.
So if you think about one limitation, what would it be?
For Web 3?
Yeah, what do they have to get over?
Well, I mean, if you send money to the wrong wallet, you lose your money. And there's no way to get it back. So that's a big limitation.
That's a big limitation. All right, we're going to take a quick break and we'll continue this conversation. A lot more to unpack here. Bobby, we've been talking about Web3, and now that we've established what it is, how does cryptocurrency fit into this? And maybe just talk about, the ecosystem surrounding Web3.
Yeah, well, okay, so cryptocurrency is essentially a digital currency, like working alongside blockchain technology, right? So it's this idea that you can use these blockchains and you can essentially travel money around the world with lightning speed. Now, with that said, different blockchains sort of have different speeds, but there's thousands of them. So there's so many options.
Okay, but there are various, we know there's like 9,000 cryptocurrencies, right? What are the ones that are associated with Web3 that you're paying attention to?
So Ethereum is the most used, right?
Okay.
So there's sort of the most NFTs, there's the most applications, there's ETH is pretty much what you use as like a standard, but it's not that fast relative to some of the other blockchains. Like you've got like Solana, you've got Polygon, you've got Avalanche. There's quite a lot that are a lot faster. So that's kind of set up ETH to do this thing called the merge, which has been highly anticipated, but delayed twice, which I believe the latest.
With Ethereum.
Yes,
Yeah.
Ethereum, right?
Okay.
So they want to finally do this 2.0, this merge, I think in August, but it should have been done by now, so we'll see what happens. But essentially, that's going to make the network way faster. And to me, that signifies that they're very, very worried about the competition, because there's many, many cryptos like way faster than they are. Also, they're segueing from proof of work to proof of stake, right?
Yeah.
And so this is vitally important to the crypto ecosystem, because proof of work is really being attacked in legislation as antiquated and ecologically inefficient.
Okay.
So I presume.
And that's Bitcoin. Bitcoin's tied to proof of work, isn't it?
That's right.
Yeah.
So just to explain the difference, proof of work is essentially you're using a series of computer problems to mine your crypto. And essentially what that ends up leading to is that whoever has more computing power is more able to sort of win that competition. So people will you have lots and lots and lots of computers, and that uses lots and lots and lots of energy. So they want to segue to a new system, which a lot of people are already doing, called proof of stake, where it's somewhat complex, but essentially what you're doing is, instead of you having a computer power competition, it's more democratic. You're essentially electing like a judge to sort of decide and validate the output. Yeah, so it just uses way, way, way less computer power.
So Bobby, why is the speed part so important in this ecosystem?
Well, because you have people all around the world. Some want to transact billions of dollars. And so, for example, have you heard of the Bored Apes?
No.
Okay. So the Bored Apes are like the biggest NFT project in the world.
Okay.
And they just launched their own metaverse. So Yuga Labs owns Bored Apes, as well as some other NFT collections. And they have their own metaverse called Other Side. And so they just had a land sale. So essentially, they're selling plots of land in the metaverse, which is like a digital ecosystem. And they ended up crashing Ethereum. So gas fees went from, I don't know, maybe $50, $100 to $5,000, because so many people wanted to use it at the same time, and you had to use ETH to do it. So, ETH made a lot of money, but it also crashed the system, and so they ended up shifting to Polygon later. So what does it mean? Well, if you have like a blockchain that it's way slower, gas fees are way higher, and then less transactions get done, right?
Okay.
So you want to create like a sort of more efficient system where as much data as possible can be transferred.
All right.
Yeah.
We have about a minute.
Sure.
You talked about Metaverse.
Yeah.
How does Metaverse fit into this Web3 ecosystem?
Yeah. So there's all these different buzzwords, but they're all actually very different and not too difficult to understand, right? So Metaverse is really just like a digital ecosystem. So you can use AR, like augmented reality, or VR, virtual reality. My view is that is going to be a niche part of it, because I actually think that out, it's essentially a digital ecosystem where you want as many people as possible to participate in it. So I think they're still building it out to figure out what exactly it is, but essentially it's this like new world where you can like, watch a movie or hang out with your friends or play video games or go to a concert or shop. Like anything that you can do in the real world, you can do in the digital world, in the metaverse.
Oh, okay. And in terms of Web3, is it here or is it still really evolving? Like, are we able to use it now?
It's here.
It's here.
It's here right now.
All right. We're gonna talk about more on that then,
right.
and how people can make money from Web3. We'll be right back. Bobby, for those that are watching this, how do they participate and make money in the Web3 ecosystem? I have to assume there's different ways of doing it.
Yeah, I mean, look, it depends on what you mean by that, right? So if you mean as an investor, obviously there's many, many different opportunities to invest. Now, the crypto markets have generally been down. All the markets have really been down. I don't give financial advice, all the things, the disclaimer. But yeah, you could invest in certain coins. You could invest in certain DeFi protocols. You can invest in certain NFTs. There's many, many, many different sort of investable products within the Web3 ecosystem. What I would say as a caveat is just really, really do your research. For me, like I believe in the technology long term. In terms of day-to-day fluctuations, it's very, very volatile, very risky. That's why regulation is probably the biggest issue in the space. Not everybody wants to hear that. There's a lot of people who don't want regulations at all. But unfortunately, when something like the Luna Terra collapse happens, as it did a couple weeks ago, the regulators, the governments, you can't have $50 billion evaporate from the ecosystem in a day, right? With no checks and balances. So it's kind of a buyer beware thing, but the space is changing every single day. I do believe in the technology long term, but in terms of making money, I would just caution people from being too short term because it's a very, very volatile space. Yeah,
you mentioned ETFs, so there are ETFs out there that invest?
There's a Bitcoin ETF, that was Canadian, actually, the first one.
Okay, and they do invest in that. You talked about approaching this responsibly.
Yeah.
What's your advice? Because a lot of people have blown themselves up, and it's hard to try to tell someone, don't put money into this space if you're not okay to lose most of it. And yet we see that.
Yeah, and that's investing 101, but at the same time, we have to be empathetic when people lose the amounts of money that some people have, right? So look, the thing about crypto, if you're going to invest in it, trade, to be honest, like all Web3 sort of products, the returns can be tremendously high, but you could lose it all in a day, right? So you have to be very, very careful. And this is what we learned because the Luna Terra ecosystem, it's like a top 10 market cap. We're talking about tens of billions of dollars, right? And it just collapsed pretty much in a day.
Yeah.
Right? So people were making a lot of money, but at the other, it's people, I think, who are not used to the Web3 crypto ecosystem are shocked how fast it moves, and there's no business hours, right? Like banks take the weekends off, crypto doesn't.
ETFs they only trade on certain hours in the stock exchange as well.
Right, so that's a big difference, right? So you're talking, if you really think about that, you have twice as many hours for things to move and shift all around the world. Also, it's unfettered and largely unregulated. It's not unregulated. That's a bit of a myth because there's different regulations in different countries. But the speed of money and the volume of money is unprecedented, right? And it never closes. So you have to be very careful, especially if you're doing the day trade thing, because you've never seen this amount of money move so quickly in the history of money, and it's going to 10x, 100x in the future.
Do you think investors then, Bobby, have to take a long-term view, or is it just getting better at the short-term trading?
Look, I think that people are going to adopt whatever investing strategy makes sense for whatever they're doing. I would just say be cautious and don't Don't just jump into something that you don't understand. And I would like spend the time, like anything else, do due diligence, track what's happening, but just know that it's an incredibly volatile asset. Now, that could be really good too, right?
Yeah.
I mean, you could 10x your money in a week. Like that's uncommon, but it can happen. So you just have to understand that it's a very, very volatile part of your portfolio. And for me, my personal philosophy would be have it part of your portfolio, but not all of your portfolio. A diversified portfolio is generally the safest, but some people don't want the risk.
Right.
It depends what you're doing.
We have about 30 seconds, and I just want to make the point, like, you see this extreme, right? There's like euphoria, and then there's this fear. Do you think that what we're seeing right now is undermining the legitimacy of crypto? Because now you're hearing a lot of people saying, told you it was a whole, it was a scam.
Yeah, it's not a scam, right? I mean, I think if you look what happened with the Luna Terra ecosystem, you're talking about a very experimental crypto, this thing called an algorithmic stablecoin, which had never worked and never been tested really, never been proven. So to sort of like lump that into all the other cryptos is not really practical.
Okay, we'll take a quick break. We'll be right back. Welcome back. Bobby, we've touched a little bit on regulation, and I just want to spend a couple of minutes talking about this. How do you see it unfolding, and do you think that we're doing enough right now to manage the crypto space?
So it depends how you define we, because there's,
Regulators,
200 countries in the world
Right.
approximately. So there's, you have 200 sets of regulations. They are coming fast and furious. Some countries are further along than others. Some are more stringent than others. China decided that they would ban all crypto activity and then launched their own digital currency, effectively creating a monopoly in their own country. And they had the highest percentage of Bitcoin miners in the world, right? So what does it mean? It means that regulations are definitely coming, but how cohesive are they going to be? What are the countries that are going to sort of brand themselves along freedom? What are, like if you look at Europe, right, they're launching the digital euro and they're announcing some regulations that seem quite stringent to me. Like, well, specifically like if the market cap is 5 million or above, which is nothing for crypto, then all of a sudden it gets really, 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 really rigid. And so it just seems like to me that they're almost pulling a China. They're sort of legislating crypto to the point where it can't move because they're also trying to create a monopoly for digital currencies. So you see, pretty much all central banks are doing these things called CBDCs, central bank digital currencies, where essentially they're launching their own crypto, and then now they're working with the governments. And so you're going to see this competition happening between the banks and sort of the private crypto sector, but it's going to vary country to country, I think, based on their goals.
Do you think that regulators have a knowledge gap, though, that could hinder the space?
Yes and no. I don't think, obviously, all regulators are created equal. I have friends who are regulators in different countries. I've spoken to them. Some are quite knowledgeable, some are not. Yeah, look, some regulators are brilliant and some are ignorant. Just like anything else, it's a fast-moving space. It's complicated. It's technology-based, and it changes every minute, right? Yeah. So it's hard to impose rules on a space that could be completely different tomorrow. Like that Luna Terra collapse that I keep referencing, it completely changed the space 2 weeks ago, right? And that sounds maybe ridiculous. Yeah, right. No, because it was a top 10 market cap for a very new space, it's billions of dollars, and it just changed the way the entire infrastructure works and lives and breathes and moves. So when it comes to regulations, it's just how do you set rules on a moving target? I think that's the biggest challenge.
Yeah, because I mean, we have, like you said, 9,000 cryptos. You wonder how regulation's going to...
And it's probably more than that.
Probably.
Well, but that's just what people know about, right? Because you can hide them too, right?
Right. If you had a sort of a magic wand, what do you think regulators need to focus on today?
So
One thing that would help.
In Dubai, they really focused on identity, and I think that's going to be a big one. I think it's going to be quite.
So
frankly,
you're not anonymous? using it?
Yeah, that's right. I think it's going to be illegal to be anonymous and transact business in Web3. And people don't want to hear that, but because if you know who somebody is, then you can do your KYC, you can do your AML, right? You can look at a track record. A lot of the rug pulls, a lot of the big issues that that get the headlines, and rightly so, because a lot of people have lost a lot of money in the Web3 space, are from people whose identities were obscured. So I think it's very obvious to me that anyone transacting business in the space, you're going to have to prove who you are.
Okay. We have about 45 seconds left until the end of the show. What's one thing in the crypto space that you're watching for evolving this year?
Well, the ETH merge, I want to see if it finally happens because it keeps getting delayed.
When you say ETH merge, what do you mean?
Okay, so it's called it's essentially an upgrade to Ethereum.
Oh, got it. Okay.
They call it the merge. I do want to see if it finally happens and what that impact is. I really like ETH, but at the same time, like there's just so many blockchains that are faster and the technology moves so quickly. I guess I want to see like who's going to be the leader, because if the ETH merge fails, I think they're going to get superseded, and there's quite a few people who are right there.
Chomping at the bits,
100%.
Right? All right. Bobby, thanks for coming on today.
Thanks for having me.
Really appreciate it. That does it for this show. If you have some comments or questions about what we discussed or cryptocurrencies in general, I'd love to hear from you. So drop me an email. Thanks for watching. Until next time, stay well, stay wise, and stay wealthy.